They should have all gotten the public link, but looks like Ashley is joining us. All right, if you are joining us, we will be getting started in just a few moments. Want to give those of you who are attending a chance to log on and get your audio working and everything like that. So we'll go ahead and get started in a couple minutes. We'll let some more people join us. Thank you.
Hey, Courtney, can you check the host and panelist chat box, please?
Welcome, everyone. If you're just joining us, we're going to give it a couple more minutes so people can log on and hear about some home buyer education. So we'll give it a couple more minutes and then we'll go ahead and get started. Thank you for your patience. All right, welcome everybody. So in the interest of time, we're going to go ahead and get started with our home buyer education webinar. My name is Courtney Espinoza and I'm from the city of Fresno and I oversee Transform Fresno, which is one of the hosts for tonight for this workshop. I'm going to go through a little some logistics about interpretation. So we do have simultaneous translation services available in Spanish and Hmong tonight. So all participants should join a language channel in order to listen and communicate with participants. First, select the interpretation globe at the bottom of your screen, and then you can choose your preferred language. So at this time, I'm going to go ahead and ask our Spanish interpreter to repeat those instructions in Spanish.
Thank you very much. Buenas tardes a todos. Bienvenidos a este seminario. Queremos informarles que tenemos interpretación disponible al español si usted desea escuchar la junta en español. Si ingresó utilizando una computadora, una vez que la interpretación sea encendida, va a ver el icono de un mundo en la parte de abajo de su pantalla. Por favor, seleccione ese icono y seleccione el canal de español. También le invitamos a silenciar el audio original para que solo escuche la voz del intérprete. Si usted ingresó con un teléfono móvil o una tableta, sus opciones son diferentes. Va a tocar su pantalla, va a buscar los 3 puntitos del menú donde diga más o more, va a seleccionar donde diga interpretación de idioma, después seleccione español, nuevamente silenciar el audio original y por último el botón que diga done, listo o finalizado. Thank you very much.
Thank you. And if I can have our Hmong interpreter go ahead and repeat the instructions in Hmong, please.
Nhớ trong xe tại tỏ trong tan cho nên thì cái tin chào nên là công bên đã lúc trong xe thảm mà nó hay cho yếu và yếu chế do hay tiền này nó này công bên ấy nên sao tông ta bao họ nó trong mong ở cái xà lụt nữa nó chế thọ này mù trò nhớ họ can để sát xì có yếu bỏ lúc lâu cái nè nó họ có xài hệ tiền mong chỉ có yếu người mà lý cho có một trò trong mong chế thọ có một trò họ có yếu nó cũng muốn cho lụt ăn chỉ nó xài lụt mong do hay có công bé học sở tông nữa mà bé lưu tình có nè bé lưu tình đợi chế nữa cho có một trong đợi chỉ có sai hệ chế sai lỗi interpretation chỉ có mà lên sai thì món này chế nữa mà cho có một trong món này chế mà lên chỉ này cho họ ở trong tàu. Thank you.
All right, I'm going to go ahead and start the interpretation. All right, so at this time I've started the interpretation. Please, everyone, choose a channel. Even our English speakers will need to choose the English channel as well. So moving along, we are recording this session and this will be played on our Transform Fresno YouTube channel in the future. So if you can refer back to it if you would like to. And also, if you haven't used Zoom before, if you're not familiar with it or it's been a while, we are going to be taking questions at some points in our presentation. So if you are a participant, go ahead and use the raise hand feature or press *9 on your telephone, and that will indicate that you have a question. I will call on you and ask you to unmute yourself, and then you can ask your question. All right, so with that, we'll go ahead and get started. And I want to introduce you to Jackie Whedon and Abel Flores from Precision Home Loans. They are going to be your speakers tonight and provide you with information you need about buying your first home. So with that, we'll go ahead and turn it over to Jackie.
Perfect. Thank you so much, Courtney. And thank you everybody for joining. We really appreciate you taking this time out of your busy lives to get educated with regards to buying a home. We're definitely thrilled that you are interested in purchasing a home, or even if you have a home already and are looking for paths towards purchasing additional investment property, then we have a lot of information to help you out with each of those steps or whichever direction you're going to go today. Buying your first home is definitely a significant milestone and a substantial financial commitment. We understand that the process may be very overwhelming and there's a lot of questions and uncertainties that come through the process, be it if you're talking to a family member or a friend or someone else who has gone through the process themselves. It's really important to remember that every single transaction is different, as all of our lives include different things on a daily basis. And so We are going to share a lot of information with you today. If you have any questions, you'll be able to either ask those questions during this process, or you can always reach out to either of us on an individual basis afterwards as well. And we'd be happy to answer any questions that you have. The topics that we are going to go over today are going to be very detailed in the process of the mortgage, and then of getting a mortgage, being pre-approved, and what that looks like, and then also how to get you prepared for each of those steps in the beginning, whether it's documentation of income or your credit, if it's credit repair, those types of things. So again, any questions that you might have, please feel free to jump out and ask us at any point in time. I myself have been in the mortgage industry for over 22 years now. I had managed the Wells Fargo home mortgage department for about 12 of those 22 years. And I continue to do this on a daily basis because I'm passionate about helping every single person that can get into a home do so. It's definitely rewarding to be able to go walk in your front door and know that you own it and that you are building equity and creating financial dreams for your family members. Abel is also here today, who has been in the mortgage industry for over 10 years as well. We both come with a lot of information that we look forward to sharing with you.
Thank you,
Today's
Jackie.
agenda
Oh.
is going to be going over first the benefits of owning a home, comparing your financing options, mortgage basics, as I've said before, credit fundamentals, meeting your home purchase team and understanding what that team looks like, the loan process from beginning to end, and then some step-by-step buyer guide information that will help you. There's a lot of other information at the end that we may or may not necessarily get to. You will get a copy of this presentation so that you'll be able to look back on it later on as well. And with that, I'm going to let Abel go ahead and start out with the benefits of owning a home.
Thank you, Jackie. Can you guys hear me?
Yes.
Okay, perfect. So yeah, thank you, Jackie. So first of all, I want to thank Courtney for putting this together for us and allowing us to speak here at this event. I greatly appreciate that. And yeah, as Jackie said, my name is Abel Flores. I'm a mortgage loan officer with Precision Home Loans, and I've been in the finance industry since 2009 after graduating from the University of California, Riverside. And before coming over to Precision, I've had the chance to work with some of the nation's top lending institutions, the likes of U.S. Bank, J.P. Morgan Chase, and Wells Fargo Home Mortgage. But yeah, I'm looking forward to assisting you all tonight and giving you some education that you can take home and put to use. And I'll speak a little bit slower than usual so we can have our wonderful interpreters keep up as well. So thank them for being here tonight also. And thank you guys for taking time out of your busy schedules. Now, let's go to the next page, Jackie, so we can get started on the presentation. All right. So now we'll start off with how many of you, none of you, or some of you might know this, but just in case you don't, 90% of America's millionaires have actually been created through real estate. Not a lot of people know that, but in case you don't, now you do. Why is that? Because it's a powerful source of wealth. And the reason why it's like that is because of what's called appreciation. And technically, theoretically, and in practice, as time progresses, the home value of your property goes up. What you own the property starts going down, and that difference is going to be what's called your equity. Now, as more time goes by, the more equity you will own in your home, and that is due to the power of amortization. Now, the more every time you make a monthly payment, that reduces your loan balance, increases the equity, which can then get you more benefits as far as what you can do with the cash. If you ever sell your property, that equity is for you. If you look to get, let's say, a home equity line or some sort of cash from your property, you can do that as well. But it's yours to keep, and it's yours to do whatever you please with it, which is definitely a great tool. Another important thing to note is that it's an inheritance, right? It's an asset that can be passed on to your heirs, to your kids, to your family, to anyone you see fit. It is practically it's your property, right? So you do as you please, but it can be passed down, and that's one of the big advantages of owning real estate. On top of that, when it's yours, you can personalize it, right? It's your property. You can do whatever you want as far as the colors. You can redo your kitchen, redo your floors. I mean, you can do anything it is you want to do. You personalize your space, right? Technically, this is where you're going to be spending most of your time, right? When you want to get home, you want to get home to something nice, so you can definitely do as you please. Compared to where you rent, you cannot do much there, right? You have a landlord, and you have limitations as to what can and cannot be done there. Now, another important factor to consider will be potential tax benefits as well. Obviously, you want to consult your tax professional to maximize your benefits. But one thing you can do definitely is your mortgage interest that you have that comes from the payments that you make, your mortgage payments, can definitely help you potentially limit your tax liability, which makes a big difference when you have to pay Uncle Sam. So next slide, please, Jackie. Now, a couple of key areas to consider when you're buying a house. You definitely want to make sure, of course, have some upfront cash, right? We need a little bit of savings for you to cover your down payment. Also, potentially what's called closing costs, which are technically your costs for doing the loan. And simply put, that would be your title and escrow fees. That would be your lender fees, and then any fees associated with your actual loan. Now, one thing to consider, of course, when you do own a house, you have to get out of the renter's mindset, I call it, because there is no one to rescue you when you own the house. I mean, if something goes haywire, or let's say your AC unit goes out, or anything for that matter needs to be repaired, that is definitely on you, and you have to take care of all that. But it's okay, because with great risk comes great reward, right? You are the one that owns the property. No one can tell you anything as far as what to do with it. You are the one that gains the benefit of the actual equity associated with the property itself. So with the actual risk, with the actual maintenance that you have to do, of course, you have a lot of benefits too. And basic property, of course, values, of course, can fluctuate. They can and will fluctuate. But when you own a property, you're in it for the long run. Historically speaking, home values have only gone up, and up and up. I myself grew up in Southern California, so I know that the home values will definitely keep going up no matter what. And people will still keep coming over here to the Central Valley, for instance, from Northern California, Southern California, and so on. And the sooner you can get into a property, the better, because unfortunately, home prices usually tend to keep going up, which is why real estate is such a great asset to own. Another thing to consider is that there's limited flexibility, of course. You can't just grab your home and put it into your U-Haul, right? You have to, if you look to move, or if you look to change a job, or if you look to go to a different location, of course, you will have to sell your property. Or if you have enough equity there and you're looking to rent it out, that's another option for you. Or you can sell the property, of course, and use your equity to buy another one. But it does take a little bit of time. It doesn't just happen from one day to the next, but that is just part of the process when you own property. And of course, you will need to monitor your budget. One thing I did, I want to go over it too, as far as your expenses. If you buy a home that has what's called homeowners association dues, usually that comes along with buying a condominium, or buying a townhome, or maybe buying a home that's in a gated community. Those communities we usually have with shared spaces like a gym or like a pool. They will usually have the landscaping or the gardening covered, so you don't have to take care of any of that. But that's an additional cost that you'll consider once if you're looking to buy a property in that space. Next slide, please, Jackie. All right, now once we get into the financing options here, the most popular you'll see when it comes to buying a home will be your conventional and FHA loan products. Your conventional loan product will be your non-government loan. These loans are purchased by corporations, private corporations called Fannie Mae and Freddie Mac. And they usually require at least a 3% minimum down payment, depending, of course, on the actual program that we utilize for you to purchase the home. Now, there's a thing called private mortgage insurance, and you will have that if you don't put more than 20% down on the purchase of a home. Now, that's there to protect the actual lender in case of a foreclosure, or if you default, don't make your payments on time. That's why that's there. If you put more, 20% or more down payment, you definitely do not have to pay this private mortgage insurance, but the majority of people will have this PMI charge. Luckily, with the conventional loan, once you get to 22% of equity, and equity again is your difference between your home value and what you owe on the property. Once you have that 22% cushion, you can normally get rid of that private mortgage insurance. Your typical minimum credit scores for this will be a 620 or above. And now, if we compare this to an FHA loan, which is a government loan, which is a Federal Housing Administration product, they require a minimum down payment of 3.5%. And with this, they also have their own mortgage insurance costs. Back in March of this year, FHA, to be a little bit more competitive, lowered the cost of the mortgage insurance costs, which is great. That definitely helps us with affordability. And they do, the drawback to an FHA loan, they do have a little bit more upfront costs, and they have lower maximum loan limits depending on your actual county that you live in. Here in Fresno and Tulare County, it's about $472,000. And the great advantage of FHA loans, they tend to be a little bit more flexible when it comes to the credit scores. And depending on what programs we use, we can go usually as low as a 580 FICO score. Next one, Jackie. Now, comparing financing options, obviously there's no one size fits all for anyone. Everyone's different. Why we have different FICO scores, different incomes, different goals that we have in mind. So everything is based off of the clientele or the buyer's needs. Another great product that can potentially be used here is our zero down loans, like a VA loan, which can be taken advantage of by our veterans or our men and women of the armed forces that are currently serving. And with this type of loan, you have a much more attractive interest rate usually compared to, let's say, an FHA or a conventional loan. And you also have the ability to have a little bit of a lower credit score compared to a conventional loan. Also, the VA funding fee, which is the fee that is put on by the VA to cover this type of loan, can sometimes be waived depending on the eligibility of the buyer. And this is only eligible for primary homes. We cannot use this for second homes or rental properties. Another good loan to mention is our USDA or the U.S. Department of Agriculture. They also have a loan that you can put 0% down. The only drawback to that is that you can only buy in rural areas. So anything outside of Fresno, outside of the city of Fresno. So anything that's considered rural will definitely be able to use that product. Of course, they have their own guidelines and their own requirements. And it's all going to be, of course, on a case-by-case basis if it makes sense to go that route. Another option that's out there will be what's called your jumbo loan financing. And that's practically any loan that greater than $750,000. And those loans are a little bit more, they have a little bit higher requirements for your FICO scores, and they can be used for primary, second, and investment properties. And that is another avenue that we can explore if we have a much higher loan amount. Now, usually what everyone likes to hear or talk about when we talk about first-time home buyer programs will be your down payment assistance programs. And these are typically combined with your conventional or your FHA loan. And these assistance programs can pretty much get you into a home with little or no money down. Minimum FICO scores required for these are usually around 620. And they usually want these for primary homes. Now, as far as your typical assistance programs that are out there, your first-time home buyer options, the most popular you'll see will be your Cal HFA, or California Housing Finance Agency assistance, and also GSFA, your Golden State Finance Authority. Now, with Cal HFA right now, and this will fluctuate depending on the rate market that we have. Right now, as of yesterday, they were assisting with up to 6% of the purchase price. What that means is if you're looking at, let's say, a $300,000 home, you're looking at roughly $18,000 in assistance. Of course, borrower income limits and purchase price limits apply. The minimum FICO score for this program will be a 640, only for primary residences, and no cosigners are allowed. So you cannot say, hey, look, I'm going to have my aunt on this loan to help me cosign for this property. They won't allow for that. One thing we need to really consider, think about when it comes to these assistance programs is that they're technically not free money. If you do get, let's say, up to $18,000, they will put a second or even a third lien on the house. And luckily for Cal HFA, you do not have to pay these loans back. You have 30 years to pay them back. Very low interest. You're looking at only if they assist you with your down payment, you pay 1% on that, and you pay 0% on the rest of the proceeds that they're helping you out with. But at least you won't have a monthly payment, and you can pay it as soon as you want, or you can take up to the 30 years. So if you ever refinance the house, or if you ever sell the house, that money has to be paid back. But at least what it does is it allows you to get a leg up when it comes to buying a house, right? Usually this will help you keep more money in your pocket. Therefore, you don't have to spend too much out of pocket, and therefore have more funds, rainy day funds, or etc. Now, the difference between GSFA will be that the assistance level is pretty similar to the Cal HFA loan or assistance. And the big thing is that they will allow for cosigners, and they will also allow for existing homeowners to be able to use this loan. So if you own a property, you can still technically utilize this assistance. And the definition of a first-time home buyer will be someone who has not had ownership interest in a property in the last 3 years, or who has not lived in a property that is owned by their spouse. So that's the definition that they consider as being a first-time home buyer. And now the GSFA assistance will only be available for primary homes, but it can be used for buying a multi-unit property. So if you're looking to buy a duplex, triplex, or a fourplex, as long as you live in one of the units, you can definitely get the assistance up to 5.5% of the loan amount from GSFA. They also have a little bit lower FICO score requirements at a 620, and potentially we can go up to 55% of your debt to income ratios. And of course, that's depending on the product that they have available with through GSFA. But that is a great option that's very popular nowadays. Another thing we can touch lightly on will be your city assistance loans. This is only for first-time home buyers. These are location limited, meaning that we have to go to a specific location and see if they have assistance. And these typically can be combined with a conventional or FHA loan. The assistance can be anywhere from a fixed amount, let's say $95,000, or percentage of the actual purchase price, anywhere from 35 to 49%. Minimum FICO scores there can go as low as 580 for the FHA product. This can only be for primary residences. No co-signers are allowed. The big catch with these programs, of course, is the location itself. You have to like it, and then there have to be funds that are available for you to utilize. And on top of that, there is high levels of documentation required, because they're very picky about who is applying for these loans. They will check literally everything. So there's a lot of hurdles to jump through, but they have a lot of upside because they do provide a lot of assistance. Household income limits do apply for these, not just who's buying or who's being on the loan. Who lives in the property affects the actual qualification.
And I just wanted to chime in really quick with regards to the down payment assistance program and make sure that everybody does know that we are aware of the California Dream for All program that I know is all of the rage with regards to the media from earlier this year, and that there's a lot of talk about it on social media, as well as the news has mentioned it again, and then just amongst real estate agents and anybody in the industry. That California Dream for All program that was here at the beginning of this year is anticipated to come back sometime in the spring of 2024. So within the next, I would say probably 4 to 6 months, we should have either the program as a whole available or more information on it. We are not speaking clearly on that today and how that program specifically works, just because CalHAFA has made it very detailed that they are not ready to release the new guidelines. Last time the program only lasted about 2 weeks, and then the funds were exhausted. So they're really working to make sure that they write those new guidelines and rules to follow that will benefit as many home buyers as possible that really do need the funds, as opposed to some that may not necessarily need them but are taking advantage of them. So I just want to make sure and mention that the California Dream Pro program will definitely be coming back. We just don't have anything specific on that. And at that point in time, we'd be happy to reach back out to you and let you know if it did come available, if it's one of those programs you were hoping for information on tonight.
Thank you, Jackie. Now, other financing options, which are called non-QM financing or non-quality mortgage. This will be your specialized niche lending products. This is more advanced for someone who's, let's say, a business owner and wants to use their bank statements as their income, or profit and loss statements. We can use those. These types of loans typically will have a much higher down payment. There is no first-time homebuyer assistance for this, but this is just worth a mention. There's also I-10 loans for someone who has an I-10 only, does not have a social security number. We can also use for business owners or W-2 employees. They usually will require 11 to 20% minimum down payment, depending on the FICO. And sometimes they'll be able to go as low as a 620 FICO score, or work with someone who has no credit score at all. This can be used, and there's a typo here on the slide, but it could be used for primary homes, second homes, and investment properties. And that's just another avenue that can be explored. Now, DSCR loans, etc., that's just a whole nother conversation, but it's just worth a quick mention here. Now, the mortgage basics, that's your length and term of the mortgage. That's just the period of time during which you pay back the loan. Of course, the longer the term that you're dealing with, the shorter or the lower the actual payment is going to be. And if we shorten your term, so let's say a 10 or 15-year loan, the higher your payment's going to be, right? There's a reason why the 30-year mortgage is king. And the reason for that is that gives you the lowest payment possible. And it's still, even though if let's say you have a 30-year loan, that doesn't mean you have to have it for 30 years. If you make more payments towards your principal on a monthly basis, you will be able to get this loan paid off faster. And you should recommend it if you can. The big advantage of the 30-year loan is that you have the lowest payment possible, but you can make additional payments towards the principal, but you're not obligated to do so. So you can definitely take advantage. And for some reason, if you're low on cash or something happened where you cannot, you're making your payments, the 30-year will be the best bet for that purpose. Now, the components of a mortgage payment, your PITIA. Your P stands for your principal. That's the amount of that you borrowed. I stands for the interest. That's, of course, the interest you're paying on the money that you borrowed. And T is for your property taxes. I will be for your insurance, which is your homeowner's insurance policy. And if your home is in a flood zone, you will have what's called flood insurance, and that's a requirement in case your home is in one of those areas. And A will be your association dues, which is what we talked about a little bit ago with your homeowners association. Now, just some basic credit fundamentals. Unfortunately, we couldn't have our credit expert here tonight, but just on the basics of how your score is scored. We look at your previous credit performance, which is the biggest chunk of the way they calculate your score. That's payment history. We also look at your current debt levels. Whenever we have someone who's looking for to apply for a loan, the best thing you can do is to have your credit card balances be under 40% of your total credit limit so that you have the highest score possible. We need to remember that the credit score is an essential part of the mortgage loan, and technically it can determine what kind of assistance program you can get when it comes to the first-time home buyer programs that we can use. So the higher your FICO score, the better, the more chances you have of getting the assistance program that you want. As far as the score itself, the depth of your credit file, how back or how long of a history that you have with your credit score, that'll be 15%. And then 10% will be if you've added any new debts. Normally, we do not recommend you get more new debts because we have to factor that into your debt to income ratios. Of course, if you're looking to buy a house, don't go and co-sign for someone, right? Or buy a car with a hefty payment because that affects your actual income as well. And yeah, but those are the basic ways that your credit score is scored.
Thank you, Abel. It's a lot of information that we've gone over so far. I want to make sure that if you have any questions, that remember that you can put those in the chat box, and that Courtney from the city of Fresno is watching those for us in order to so that we can answer those questions promptly or even at the end if need be. So moving forward and continuing with the credit fundamentals, it's important to know that the depth of your credit, it actually lasts for 10 years. And I think that that's something that we need to make sure that you are aware of, because what happens is that a lot of us and plenty of people have gone, let's say you get out of high school and you get your first credit card right when you turn 18, and you're very excited to be able to build your own credit and start your own life. Many have not known the right way to use credit, not by any fault of their own, just it's something that's new and different. And sometimes it gets skipped over when you leave from your parents taking care of you to not. Or we run into hardships in a sense to where you've lost your job, or anything else may have happened medically that could make it to where your credit takes a little bit of a dip because of those things. And so it's important to know that your credit does last 10 years. So protecting it as much as you possibly can is important. If you have any debts and what we're going to go into next is, if the screen will change, there we go, is how to make sure that you are protecting your credit at the same point in time as building it, or even if you need to repair that. If you have credit cards that have had late payments in the past, and a significant amount of them, even if you start paying those credit cards on time, let's say that you had late payments 5 years ago, but you've been paying on time on that same card for the past 5 years. That card is still going to continue to bring down your credit score because it lasts for 10 years. So the longer you leave that card open, the longer it either hurts your credit or makes it to where it's keeping it from moving in an upward fashion. So a tip would be, if you have a card that you did have some life experience and ended up having some late payments on it, or it goes to collections, anything along those lines, you want to get those closed as soon as possible once you're able to catch up and start making on-time payments. If you close that card and open a fresh new card that you're going to continue to pay on time for, that will serve your credit score in a much better fashion, and it will make it to where that old debt will stay old and will eventually fall off at the same time as it won't continue to report. So making sure that you pay your bills on time and including at least the minimum amount due, but more if you can, is definitely the most important way to protect your credit. Try not to max out your credit, as Abel mentioned earlier. The key is to have it at no more than 60% of the maximum balance of that credit card. So for instance, if you have a credit card with a maximum of a $2,000 balance, you want to ensure that you don't charge more than $1,200 on a monthly basis on that card, and that the balance that is owed and outstanding never goes over that 60% of what that maximum would be. Once it goes over that, whether you owe $500 on a credit card or you owe $50,000 on that card, it's going to affect your credit the same. Because if you have a card maxed at 500 and you have your maximum balance allowed is 500 and you've charged 500 or 50,000, in either way, they look at it as if you're living off of your credit. And so that is what drops your credit score. It's also important to limit the number of credit cards you have. A good number is going to be probably right around 3 to 5 really max is the number of credit cards that you want to keep open at any point in time. And try not to spend money on all of them if you don't have to. If you have one card that's for emergencies, that's just there just in case, that's wonderful. If you can keep those down to where you only have a handful of cards, it is easier to manage at the same time as it's not going to make it look like you are overextended. We have to remember that the credit system is just algorithms. It's a computer in the background that is saying, if you do this, then this means this. And so whether you pay all your bills on time or you've had those life experiences, the best way is to minimize the amount of algorithms that they're able to put against you, and for lack of a better explanation of that. So when you go Christmas shopping this year, in the coming months, just remember, no, you do not want to have that extra credit card just to save the 10%, because essentially it will end up costing you more than 10% later on down the road. So find a card that is going to get you points and that you can build off of and use those one rewards to focus on instead of opening those multiple cards. Avoid making impulse major purchases. The larger the purchase, the larger the credit card debt, the harder it is to pay it off when you're paying 25 to 30% interest rates on credit cards. And remember that you are responsible for all joint accounts. So as Abel mentioned, co-signing is not always the best idea. If you need to in order to help somebody, or if it's for a specific purpose that you are purchasing something together, just remember that anything that is co-signed in the credit world is your responsibility. So let's say you go and you help your best friend and you allow them to, you co-sign for a credit card or for a car for that matter. That's not your car. You don't drive it on a daily basis. You're not going to know that if the payment is getting made or not, because they're responsible for it and you're trusting them. If that payment doesn't get made and you don't know about it, that is still bringing your credit score down, and they will come after you for the full balance. But at the same time, it could also bring your chances of getting your own car later on or buying a house, more importantly. If you can review your credit report once a year, that is a good idea. You can get it from several agencies. Annualcreditreport.com is always free and available. It doesn't necessarily give you your credit score, but it does give you all of the debts to make sure that you don't have anything that's fraudulent listed on there, so that you can address it right away before it does tank your credit score. With regards to monitoring your credit score, I do want to mention that there are plenty of different ways to do that. A lot use their bank accounts these days, because if you go onto Bank of America or wellsfargo.com, they allow you to say, check your credit score. If you, on your credit cards, they actually, within that app, you can monitor it there as well. Or just the simple process, companies that are credit monitoring systems that you can lock and unlock your scores at the same time as watch them. The key thing that is most important to remember is that you want your score as high as you possibly can get it. And that when you are applying for a credit card or a auto loan or a mortgage, it is a different score. They are working on in the coming year. Hopefully there should be a new credit system that will be a little bit more fair. At the same time, will also keep those credit scores the same across the board. But if you were to go today and apply for purchasing a car, your credit score there that they tell you when you walk out the door is going to be different than what if you came to me today to do a pre-approval for a mortgage. Those two credit scores are going to be different that we are going to use. And sometimes they're only different by maybe 10 to 15 points, and sometimes they're different by 50 to 100 points. So it's really, really important to keep your score as high as you possibly can, and to know that when you're monitoring them in those systems, that if you need help and you see it dropping, and if it's below 700 on any of those systems, then you probably want one of us to take a look at it and give you some tips as far as how to increase your credit and to get it better. Student loans, many of us, myself included, have student loans. They all just came back due, right? We didn't have to pay them for a couple of years thanks to COVID, which COVID did a lot for us, some good and some bad. One of the good things is student loans that you didn't have to pay on it, but this October, those payments became due again. It is very important that you reach out to the student loan companies if you haven't already, or if you didn't previously set up the auto pay to start again, that you reach out to them to ensure that those are getting made, because student loans will hurt your credit score just the same. It is government debt. It is a debt that you agreed to pay. And so it's going to, and the number of them that you have, because you might have $20,000 in student loan debt or more, and it's stretched over 10 to 15 different minimal loans. Each of those loans that is late is going to hurt your score, and it's really difficult to recover from that. So that's very important for you to remember. Reminder on student loans, you can put those on forbearance, and you can also get an income-based repayment plan if you're needing to not necessarily pay those back right now. Another tip with regards to increasing your credit is going to be self-reporting. And some of the information that I am giving to you right now is not on this slide. It's just very specific information that I deal with and share with my clients when I meet with you one-on-one. So self-reporting is something that can boost your score, whether you don't have credit yet, or you are in the process of building it, or you are in the process of rebuilding that credit because of some of those life experiences that happen. You can self-report debts like your utility bills, so PG&E, city water and garbage, your rent, cell phone bills, car insurance if you pay it on a monthly basis, anything that you pay on a monthly basis that you are committed to pay, you can self-report that through ExperianBoost.com. It does help dramatically as far as if you've been renting for 12 months, then, and you've paid on time for 12 months, then that will show on your credit score as good debt. And that is what you are wanting to do, especially if you're trying to rebuild. The more good reports you have to offset that old bad debt, the better off you're going to be and the higher your score is going to go. So just remember those key details and reach out to us if you have any other questions with regards to those. Lastly, I want to make sure and mention installment loans. If you have an installment loan, installment is anything that is set and fixed for a specific amount of time. So revolving is going to be credit card debt or something that monthly payment is due, and then you can borrow from it, pay it back, borrow from it, pay it back, and have that balance come back available. And then installment debt is any debt that is guaranteed. So you buy a car or you take out a personal loan that you say, I'm going to borrow $10,000 now, I'm going to pay you back by the end of 5 years. That's installment. Any installment debt that you have, definitely you want to pay that on time, as every single month. And the reason why is that installment debt, if it's late, that hurts your credit way more than it does on a revolving debt. Installment debt is kind of like, take for instance, you want to buy a house and you're agreeing to pay for a monthly mortgage payment in the same amount every single month. If you can't do that for a $500 credit card, then it makes them review the risk in a different light for buying a house.
Jackie, there's a question in the Q&A. It says, when you said not to get a credit card, do you mean the Star credit cards that they claim will help you save 10%?
The credit cards that will, I'm going to read that myself as well. Thank you, Abel. Oh, yes. That is what I mean. So when you walk into a store, like say, for instance, Best Buy, and in Best Buy, they say, if you apply for this card and you get approved today, we'll give you 10% off your purchase today. It's only saving you 10% off that purchase that day. So let's say, you are buying something that cost $100 and you want to save that 10%. That's $10. That's it. Well, if they give you a credit card that saves you $10 that day, but then charges you 30% and you don't pay it off right away, it is going to actually cost you more than the amount that it is saving you, is why we are saying that it's not a good idea to sign up for those. A couple of them, or one or two might be okay, depending upon the card. It's just important to look at them and see what rewards they give you. In my personal opinion, and this is just my personal opinion, not fact, you were better off going and getting something like an American Airlines credit card, because an American Airlines credit card is going to give you 75,000 bonus miles that is good for 2 round trip airfare, and allow you to fly somewhere to take a trip that you are experiencing something, instead of saving you $10, if that makes any sense. So it's outweighing the benefit that you're getting versus for having that card, because the only reason they're offering you the 10% off, or any discount in the store that day, or coupons later on, is to get you to spend more money there later. That's the sole purpose behind it. So if you are going to get a card, get one that has rewards that will actually enrich your life, instead of just saving you $10 for an item at Best Buy that you may or may not actually need. I do it all the time. I definitely buy things that I do not need. We're trying to minimize that in the house these days, but it is something that we all fall into. It's the pretty marketing that they do such a good job of these days, and Amazon Prime that says, oh, we'll just ship it to you tomorrow. It's no problem. So it's being careful of those things. If you use Amazon Prime a lot, then that might be a decent card to get, because there is rewards there. It just depends. But yes, those cards are not actually saving you money. I hope that answered it. Lots of details. Sorry. All right. So with that, we are going to go into some more just details with regards to the transaction and the process and who all is involved. It's definitely daunting to get phone calls when you're in the process of purchasing a home from a million different people that say they're all part of the transaction. But it's true, they are definitely part of the transaction. So the next couple of slides is just going to be really the next steps in the process, who's involved in it, and then we'll get into a little bit more and open back up for questions. So your loan officer, as part of your purchase team, is going to be somebody like myself or Abel. Our job is to make sure that we are guiding you appropriately with regards to income and assets, to ensure that you can actually afford the home that you're looking to purchase. The last thing I want, because I won't sleep at night, is to put you into a house that takes all of your income and you can't afford to eat. So we don't want to do that. Our job is to guide you to ensure that we are helping you make the right financial decision that works best for you and your family, because your goals are what we're trying to match. We will help get you pre-approved, which means we're going to look at all of your income and asset documentation, and your credit as well, in order to go through and give you all the numbers and let you make that decision that's best for you. And then let you know, okay, based upon this goal in your budget, this is what you can go shop for. Let's find you a house. A real estate agent or realtor is another term for it, is somebody who is going to assist you. They are licensed in the state of California or wherever you are purchasing. If you're looking to go to another state later on, you will need to have a real estate agent or loan officer for that matter that is licensed in that state. Abel and I are licensed in multiple states, as well as have access from our team that we work with to almost all of the United States. There's a few states that we leave out just because of the difficulty in lending there, but we can definitely get you in touch with somebody if it's a state that we are not able to do a loan in. The real estate agent's job is to know what's happening in the market, right? Is it a good neighborhood? Is it a bad neighborhood? Is the value going to increase, or is it something that you might want to worry about? Has there been any other homes that have sold in the area that are selling for more? So you know if you're getting a good deal or a bad deal on the house. They are also responsible for making sure that you, don't get rolled over. You're not going to get a real estate agent that's going to have you purchase a home that has termites or something else. So they're there to protect you and to guide you and make sure your investment is a good, sound investment as well. They also will do all of the communication for you between the seller's real estate agent that's representing them, the title company, us. They will take care of all of that communication. So the two most important people that you need to worry about in the transaction of purchasing a home is going to be the loan officer and your realtor, because we are the two that are on your side that are looking out for the best interest of you. In buying a home, it is important to know that it is okay to have that you should have a separate agent from that who you were purchasing the home for. So if you're out looking for houses and you go to an open house and you meet a real estate agent that's listing it and you say, okay, did you want to help me? It is okay to do that, but we don't advise it. And most realtors will tell you they don't advise it either, because they can't effectively get you the lowest price for the home and their seller the highest price for the home, and do that in a diplomatic manner. So one or the other is going to fall short. So the best bet is for you to get a realtor that you know, that you trust, and allow them to help you with that process. As it stands right now, you as a buyer do not pay the realtor. The seller is who pays both agents in that transaction. I say it as it stands right now because there's some things going on in the market that might change, but I think it's going to be quite a while down the road before that changes. So just know that they are working for you and that you don't have to pay them. The settlement agent and the title company is who they also known as the escrow company, is who is in charge of holding that money. Essentially, they're the bank. They're going to take care of it, make sure that the right people get paid, that your money, as you put an earnest money deposit down, which is a good faith deposit on the purchase, doesn't go anywhere, that it holds there until the transaction closes. And they also make sure that it records at the county correctly to show that you are the valid and official homeowner. And the appraiser is somebody who we are going to send out to determine the value of the home, to make sure that if you offer to pay $500,000, that home is in fact worth $500,000 and not $490,000. If it comes in valued at $525,000, we're going to call you. We're going to shout and scream and be super excited that you're buying a house with built-in equity already, but it will not change the price that you agreed to pay. A home inspector is somebody who we are going to hire to go in and make sure that there are not termites or any other icky bugs that we don't need there, and that everything in the house is operational that we know of. And then there's a homeowner's insurance agent, which is somebody who is going to make sure that the home can be insured. So for instance, make sure the roof is sound, and that you're not going to have any issues with it after the fact. And also ensure that you are covered effectively for what your needs are, so that if the house did burn down, that you would be able to replace the house and everything else inside of it. It also covers other items as far as burglary and so forth, all of those things that, you know, we pay insurance for on a daily basis, and pray that we don't actually need it. The loan process is next, and what that starts with is a pre-approval or an interview. In that pre-approval and interview, we're going to go over all of the things that we have just covered and told you about today, being the product and the program that you're going to get, what minimum down payment you need and how much cash you're going to need to cover the down payment and closing costs, or if there's down payment assistance. And then we're going to go over all of your documentation as well. So that is in order to tell you what you actually qualify for. So that is where the pre-approval process is. And that also includes the credit report, ordering appraisals, and any other documentation that we might need to support your approval. We will submit it to an underwriter. The underwriter gets the final say-so. So while we've been in this business for a very long time, and we're both very good at knowing whether you're going to be approved or not, or making sure that we package it correctly with a pretty little bow on top so that it does get approved. We do have to have an underwriter who is licensed give us the final approval and say, hey, yes, I agree, you calculated that correctly, and we want to give these people the keys to their home and the financing. That goes into final approval. The funny part is here, and I just realized it, and I apologize, that in between that pre-approval order documents and then the loan submission, usually is going to be find a house. So you need to find a house as well first before we can order loan documents to actually close the loan. So that with your real estate agent and shopping will be right there in the middle. And then we'll fund the loan and record. The title company will record. That's what I say, that they make sure that you officially own the house. At that point in time, we give you your keys, or your real estate agent does, and you get to start moving into your home. There's some additional details here with regards to the step-by-step buyer's guide. I'm not going to go into detail just based upon essence of time. We do appreciate you guys being on tonight, and I know that this is a lot of information. As I said, you're going to be able to get a copy of this, so I'm not going to go in detail with regards to it. The pre-approval is the most important. If you were thinking about purchasing a home and you've not been pre-approved yet, please reach out to one of us or somebody else that you do trust. And we want to make sure that you have that. The worst part about shopping for a home is doing so and then finding your dream home and not being able to buy it because you weren't pre-approved for it. In addition to that, in today's market, real estate agents oftentimes won't show you homes or allow you to go into them if it's the seller that has their requirements, if you don't have a pre-approval, because they don't want anybody, a lot of people going through houses just to look at them if they're not actually serious buyers. So think about Facebook Marketplace, and if you've ever bought a car on there, the first thing it says is serious buyers only. Serious buyer means pre-approved. So your debt to income ratio is something that we are going to calculate based upon the employment and income documentation that you give us, and then your credit debts. I do want to touch base on that because I know there's a lot of questions that comes out of most first-time home buyers in what do I qualify for and how do I know? This is just a generalization for you to keep in mind, but your home mortgage payment that we plan to give you for the house that you're going to buy, plus any credit card debt and car payments, student loans, all of those other debts that you have combined cannot equal more than 45% of what your gross monthly income is. So gross being before taxes, before medical insurance or anything else, it's what you actually take home. So if your salary is $80,000 a year, then we're going to take that $80,000 a year divided by 12. And even though you don't take that much home because they take the taxes out, that's what we're going to qualify you based upon. And so that's 45%. So we need to make sure that you are minimizing as much monthly debt as you can in order to allow you to qualify for a bigger mortgage payment if that's your goal, or just to make sure that you qualify in general. Finding a real estate agent, we definitely can give you a referral for that. I think almost everybody in the state of California now has a friend or a family member who is a realtor. Just keep in mind when you're choosing a realtor or real estate agent to support you and help you find a home, that it is definitely important to know that they know what they're doing. So somebody who just got their license, you want to make sure that they are going to listen to your needs and your desires and find the home that you want, that fits your needs, instead of just trying to sell you any house on the block. This is the making the offers and accepting it. It's very important to know right now, and don't expect it to get any better anytime soon, that when you find a house, you may not get that house in the first offer that you make. The last home that I purchased, I made actually 10 offers on 10 different homes before I finally got my offer accepted on the last house, right? So 10 different houses, 10 different offers, and I didn't get the first 9. It didn't get it until the 10th one. So it's important to know that this is not a quick and easy process, and that keeping an open mind and knowing that the house that you're looking for, you set your top 10 needs or desires in the house, and then you take your top 5 and you say, I'm not buying a house without these top 5. And you continue to look at homes and make offers when you see fit, and then get the offer accepted. Once you get the offer accepted, we walk you through the rest of it from there. If you are using a down payment assistance program, an earnest money deposit is required no matter what. But if you are doing a down payment assistance program, just know that you are going to have some money available, even if it ends up to be a 0% down payment, and you're getting a gift of funds, or you're getting a seller credit, different things to help you with that. You will still need to have some of your own money ready and available in order to pay that earnest money deposit that will go towards credit at closing. In most cases these days, we see the minimum on a VA type of a transaction with somebody needing to come in with anywhere from $3,000 to $5,000 of their own money, and other transactions are usually going to be somewhere between $10,000 to $15,000 in deposits that we will need available in order to do that. The inspections is next. As we said, the real estate agent will take care of that, and we'll help guide you through that as well. The inspections fall into a contingency period that allow us to make sure that certain things are up to par, being the appraised value, the homeowner's inspection, being that all of the appliances are working, the roof is good, there's no termites, those types of things. There's contingencies in place to make sure that you don't lose that earnest money deposit. You get it back as long as we cancel the transaction during that contingency period. Closing funds, and then identification. The closing funds, again, we need to make sure that that is wired to, we'll wire it to the bank. We'll give you those instructions later on, or during that transaction. It is important to know that your identification has to match the way you apply for a mortgage, and you have to have a valid ID. So if you are a permanent resident and your card is set to expire, please, I urge you to make sure that that is renewed before you start shopping for a home, because you will have to have that. We cannot help you purchase a home without a valid identification, being a California ID, a passport, and or California ID and or a passport. And then also, if you're a permanent resident or have a resident card of any kind, those must be valid in addition to the passport or your California identification. Mortgage insurance, there's a lot of details with that. I know Abel mentioned it earlier with regards to if you have less than a 20% down payment, that your loan, every loan will have private mortgage insurance. This is a different type of insurance than homeowners insurance. Private mortgage insurance protects the bank in case you do have a life situation where you end up missing payments. And homeowners insurance is to protect you, your belongings, and your family with inside the home, as well as the walls of the house. Closing costs are broken out into various different things. The total closing cost is going to be included in your cash to close. And then it'll be a breakdown, and you should always be able to get this breakdown from any loan officer that you're talking to. They'll initially give you what they call a loan estimate or a closing cost illustration, which will have all of these fees broken down and what they are, which ones you can actually shop for and which ones you can't. Discount points is something where you probably hear a lot of people talking about whether you buy down the interest rate or not, and that's where those fees come in. Like I said, I'm not going to go over them in detail. It's a lot of information that becomes very important once you're in that process and that transaction, and we'd be happy to go over in person. This is a list of documentation that you need to make sure that you have available. The list is not a whole, meaning that we can always add to it if need be. So the most important thing that's with regards to documentation when you're purchasing a home is that any piece of information that you give us, if there's something on there that we have a question, it can open Pandora's box and make us ask 10 more questions. So if you are getting a gift of funds, do not take cash from a family member or out of your safety deposit box or underneath the mattress. Don't take cash and deposit it into the bank. That will cause a can of worms that we will have to answer a lot of questions and may not be able to use those funds. Speak to your loan officer for specific instructions on what to do in those situations. With a gift, if it's something that's in somebody else's bank account, same thing. You're better off asking for instructions on how to have that transferred over than trying to do it yourself and moving it from 5 different accounts. And then it requires you to give us 50 different bank statements. So trust us when we want to have you do as little work as possible in order to qualify for this loan, and also have us have to collect as little documentation as possible. It'll minimize it from feeling like we're asking for your blood to be drawn. 30 days pay stubs is standard. If you are on commission, they'll also ask for the last year's ending pay stub. So the last check you received in the previous year of December prior to it rolling into the January pay stub. 2 years of W-2s. Federal tax returns for the last 2 years is generally required. It does depend on each transaction. There are some times when we only have to have 1 year tax returns, but every situation is different. So just plan to have 2 years available. If you're self-employed, the rules definitely are completely different. You're not going to have pay stubs or W-2s in most cases. So we'll be looking for business tax returns or your personal tax returns with Schedule C's. And Schedule E, we'll be looking for all of those different things, but we'll guide you through exactly what is needed. If you have questions, then you can just ask. And then bank statements for the past 2 months to show the cash to close or funds to close. And I say cash just because it's the word that we use, but know that you cannot use physical cash to purchase the house. We have to have it in a bank account somewhere, and that's where we'll give you those specific instructions later. There is a lot of do's and don'ts here with regards to what you should do and what you shouldn't do in order to when you're looking to purchase the home. I'll let you review those later, but the biggest things that people talk about is do not buy a Lamborghini or any other vehicle if you were planning on getting pre-approved for a home purchase next month. It won't do you any good and you won't be able to qualify for it. So if you have a situation where you do make more income, or let's say you're going to apply for the loan and your spouse or significant other is not going to be on the loan, but you have other income, so you can afford it, let the person who's not going to be on the loan put that debt in their name, or wait is the best option, is just wait until after you are after you have purchased the house and have your keys. Then you can do whatever you want. We do not come back and check on you after the fact, as long as you're making your monthly payment on time. If you do have a business and you have a car for your business or credit cards or anything like that, make sure that you are not commingling funds, meaning you're not taking funds from your personal checking account to pay those payments. Have a separate business account and pay those payments out of your separate business account. We can exclude them so we can help you qualify for more of a house that you want, as long as they're being paid out of the business account for 12 months. Keep copies of your W-2s and your pay stubs, your tax returns. It's not as important these days because 99.9% of us can just jump online and access it at any point in time. But make sure you can access it. And if you leave one job to go to another, make sure that you take a copy of that or email it to yourself before you do, so that you will have it available and not have to chase it down to your old employer. Make sure that you are maintaining or improving your credit score, which is a good thing to do. Stay current on all of your payments. Make sure that you are preparing a budget for yourself, and don't apply for multiple things. So for instance, if you go to buy a car, they are going to run your credit 30,000 times. And it will show 30,000 times, and it could affect your credit score. So avoid any new debt of any kind, if at all possible. During the transaction, do not go buy furniture. Even if More Furniture Store has a sale with 1% interest rate for 12 months or 0 payments or whatnot, don't do it until after you have your keys. That will definitely affect your approval as well. We've seen people be approved, ready to go, do that, and then have to either find a way to pay the furniture off in cash, or fall out of approval and not be able to buy their home after all. Can you 1 year count 1 year? I'm sorry, I'm seeing a question with, can you count 1 year, or does it have to be 2 years? I'm assuming that you are speaking with regards to income for tax returns. Is that correct? I don't know if you can type again in there. If that is the case, sometimes it can be 1 year, for sure, as far as tax returns, and sometimes it has to be 2 years. If you're self-employed, then we usually need 1 full year of tax returns that it has actually been filed with the state and with the federal government. If it is, if you are not self-employed, then 1 year W-2, you have to have 2 years total. So even if you worked for 5 years and you took a 6-month sabbatical or a break of whatever may have happened, and you go back to work, we just need 2 total years, and any explanation of why there was a gap in employment, for it. And there is a myth that you have to work at the same job for 2 years. Not the case. If you get a job offer today for more money, take it. That's perfectly fine. As long as you have 2 years history of that you have been in the job force and worked for 2 years, we will use that past income. The biggest thing is that if you are leaving a job that had commission and going to another job that has commission, that makes it sometimes a little bit more difficult. But if it's salary based or hourly based and you're guaranteed hours, you're perfectly fine to take the new job. Don't turn down more money just for that. And then again, with regards to self-employed, yes, we can sometimes take, if you've been in business for 5 years or longer, we can take 1 year. If you have been in business for less than 5 years, then we usually need 2 years of tax returns in most cases. Okay. That was a lot of information. Thank you so much for attending. Again, if you have any questions later on, feel free to reach out to us. And our information is here if you want to jot it down right now, just in case you have a question or want to shoot it over before you have a copy of this presentation. But you can reach out to either Abel or myself or both of us if you would like. We would be happy to answer any questions. We've worked together for a very, very long time. And really, it's a blessing to be able to help families get into homes. That is why I've done it for so long. And this process is not always simple. It's not always fast, just like this presentation. And again, no transaction is ever the same. So if you're talking to a friend or a family member and they tell you, no, it should be like this, just tell them, thank you, but my situation is different. We all have different walks of life, different lifestyles, and different income, different credit. You know, one has 1 kid, one has 5 kids. It's so different that no transaction is ever going to be the same. Interest rates fluctuate on a daily basis, and home prices fluctuate on a daily basis. So it's really important to remember that it's not just about buying a house, that it's really about making an informed decision that will shape your future, that's going to assist you in building the wealth that you're trying to build for you, for your family, and whatever your life goals are. We hope that we're leaving you equipped and empowered with a lot of exciting information at the same time as feeling good about buying a home. This is the hard part for sure. The exciting part is shopping for a house and then looking for paint and getting your keys and getting to move in, right? Those are the exciting parts, but everything in life that's worth anything takes work. And so know that we are here for you to guide you through that, and hopefully help see you get into a home. And if you have questions, please reach out to us. And that concludes our presentation.
All right. Thank you, Jackie. Thank you, Abel. Really appreciate you taking the time to educate folks on buying a house. I hope everybody found it very valuable. I know I learned some new things. So again, this recording will be posted on our Transform Fresno website and YouTube page, so you can go back and look at that as well. If you missed anything, please check us out at transformfresno.com. And that will conclude tonight's presentation. Thank you so much. Have a good night.
Thank you.
Bye-bye.